Greetings. The secret of my trade's success is the fact that I combine as many dimensions as I possible with my trade's direction. I have seen, including for myself, when I started trading, I focused only on technicals. And I grew my technical analysis capability over time. I could probably make some money, but it was not as consistently as I would like to. A big piece of the puzzle was missing, and that was filled when I started looking at the other dimensions, mainly the market level, sector industry rotation, and fundamentals, sometimes seasonality as well. Out of these, the most important after technical analysis is the market direction choice and also preferred trading direction choice. Those are different. Market may be going up, but it may be very overbought, and that time the preferred trading direction may switch to bearish even before the market turns bearish, because I have developed several reversal trade setups. After market, the next most important factor is sector industry rotation. Some people want to ignore fundamentals, thinking that they are doing swing trading or even day trading. However, my experience says that over hundreds and thousands of trades, if you buy only fundamentally strong stocks and short only fundamentally weak stocks, your probability of success and therefore your profitability will be higher than entirely ignoring it. So these are the four dimensions I always align, with some exceptions as I explained from time to time. Seasonality is nice to have. I don't take trades based on seasonality because the other factors, specifically technical analysis, always trumps seasonality. I use the same approach in the trade ideas that I shared since last week's market roundup, and we will see in today's session how many of those trades worked out, that is, how many of them turned to be profitable. Greetings, I am Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using the Q systems and techniques, which is as important as the systems that I develop. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. And options trading can be risky. It does not have to be, but it can be. You may learn first before using options, and you may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. In reality, we'll find out whether it is suitable for you or not only after taking trades using options and comparing the results with trading stocks only. I use Q and only Q systems for my trading analysis, and that gives me quite high success rate, as you probably know, as I will show again this week. Q has multiple components. All of them run on the Metastock platform. That's why I like to use Metastock. And the technical analysis component runs on TraceStation as well. Let's continue with the live systems. Dollar index. Dollar tends to affect the stock market. If dollar goes up, the strong dollar may negatively impact the stock market. That is the going wisdom. Does not work all the time, but that works often enough to keep an eye on dollar. If we see the daily chart, it is moving sideways inside a narrow range. We will not know what is dollar's direction until it breaks to the upside or downside. If it breaks to the upside, that may put pressure on the stock market. If it goes down, that may help the stock market. Dollar was neutral. What happened to the stock market this week? Let's look at SPY, and as you can see, I am switching back and forth between Q Global on Metastock and Q Elite on TraceStation for technical analysis, and for the remaining analysis I'll use Q Systems on Metastock. SPY. Let's look at the weekly chart. It made another new all-time high. Daily is in a solid uptrend. Until this trend line support is broken, that uptrend will continue. And even after the first trend line support is broken, there is another one that needs to be broken before I am confident enough to take many short trades. Can I take some short trades now? Yes, I can. You can. It's our money. We decide what to do with it. And in fact, I have taken some bearish trades this week. Is that unusual? Probably no. When many people were not buying energy stocks, I bought and made a profit from it. When many people are not shorting the stocks, it is therefore not unthinkable that I already shorted some stocks or ETFs. I'll share at least one, maybe two in today's session. SPY bullish, there is no sign of weakness as far as this external view, ETF view is concerned. And if we look at the futures, I don't want to look at the futures and ETFs and indexes, all of them takes more time, but it is also telling the same story. As you can see, it's very bullish, has trend line support. QQQ. If we notice the weekly and compare that with SPY, it is bullish, it is up. We can see that from the activity bar being green, but it is not as bullish as SPY. And the weekly also has bearish indecision. If I switch back to SPY, the SPY weekly candle was much more bullish shape and there was no bearish indecision. That is a change. That is a change for quite a long time, because the technology stocks and therefore QQQ was stronger. But this week, though QQQ went up, it is not looking as strong as SPY. If we see the daily, it gapped up, then it came down below this watermark resistance with bearish indecision in daily and bear release also in daily. That has created a false upside breakout. Unlike SPY, and see how I am applying the unambiguous technical analysis, quite visual analysis. The technical support is far away from Friday's close, unlike SPY again. Therefore, as far as QQQ is concerned or technology stocks are concerned, I am okay to look for shorting opportunities in individual stocks, provided, as is common in my 360 degrees trading, they are in weak industries, they are having a technical short setup or a reason technically to short at least, and preferably in weak fundamental stocks, but I am okay to ignore the fundamentals for swing trading for shorting if I am shorting the top. And looking at QQQ, if I am shorting some technology stock, it may be at the top as well. What if the stock is already in a downtrend? That is even better. When QQQ is in a confirmed and very strong uptrend, if a technology stock is already in a downtrend, I may be able to short it even more comfortably. We'll see what kind of stock we may find out. So QQQ is looking weaker than SPY. That's a change from 1 week ago. Dia, Dia also made a new all-time high. But see again, compared to SPY, it is weaker. Let me again switch back to SPY. In SPY, the weekly backdrop color is bearish. Shape is also, sorry, not bearish, what am I saying? Weekly backdrop color is bullish and shape is also bullish enough. Whereas for Dia, the backdrop color is neutral. And it has been neutral for a long time. Yes, it did make a new all-time high, but based on the weekly charts, we can see Dia is weaker than SPY. We can see that from the relative performance tilting down, and we can see Dia had been weak for a long time. However, unless this trend line support is broken, I'm not going to look to short Dia, and even if this is broken, there is another trend line support. I may have to wait for that before considering shorting industrial stocks. The small cap ETF IWM was languishing, underperforming. Nowhere near making a new all-time high. In fact, it is inside a triangle pattern. Therefore, it is not in an uptrend, not in a downtrend also. It will have to break this trend line support and then again the next trend line support before I can comfortably short IWM. So the market overall is still remaining pretty bullish except small cap, but small cap also does not allow me to short at the market level. And this is the same view I shared in the previous market recap. I showed, and we'll see those analytics again. I showed the market had reasons to pause, but it had no bearish sign. The same is true this week also. That was the external view. If I now look at the internal view using market internal health check, using the very powerful and colorful single chart market breadth total view, then we will see some warning signs. Where were we 1 week ago? We were here. That was Friday. If you followed me on Twitter, on Thursday itself, I shared the Hindenburg warning, the danger or skull signal on this market breadth chart. It's a breadth signal that tells that professionals are selling when amateurs are buying. The yellow one, the first one that came on Thursday 1 week ago, I tweeted about it. That was warning. The very next day, Friday, 1 week ago, it got confirmed. And I showed that confirmed Hindenburg in the market recap 1 week ago. And this week we see two more Hindenburgs have come. That is a cause for concern. The cause for concern was there 1 week ago itself. Now that concern is being re-emphasized more and more. That is why I am reluctant to buy now. This is a long cluster of Hindenburgs. If we see the last time the Hindenburgs came here, confirmed Hindenburg here, confirmed here, warning, none of them came in a cluster of 4. And now we see they came in a cluster of 4. What happened after the previous Hindenburgs came? Market pulled back. It didn't crash, but it pulled back enough to give highly profitable swing short trades. And now we have a much bigger cluster. I'm looking for it to tilt down now. What to tilt down? This market breadth custom index chart to tilt down. If I look at this chart using weekly daily, now we see that the weekly is yellow in color, backdrop is neutral color, neutral shape also, indecisive shape you may say, has both upper and lower tails, and daily is showing something that is concerning. Using Q signals, a huge cluster of bearish indecisions at the very top. Near jump thrust high, price extreme high, cluster of bearish indecision. Here that first trend line support is very close by. So now I can see that if this is broken, I am happy to look for shorting ideas because the next trend line support is far enough. What kind of stocks will I look for shorting? That I will find out from the Q analytics. One of them will be this distribution counts, where the distribution counts are showing up if the market tilts down next week. There are a lot of signals on this chart. The more you use it, the more you get to be on the right side of the market. Also, another thing I noticed, the overbought oversold indicator 3-month new high low, it was very high here, right when the percentage of stocks above 50-day MA was also overbought. So I mentioned it at that time. It had pulled back, both of them. And now the 3-month new high low hit the upper extreme again. That is another reason for market to pull back. And when you look at the 3-month new high low and percentage of stocks above 50-day moving average, both are kind of oscillators, but you can see from my analysis today and also as you study them, the 3-month new high low is a more responsive oscillator. It goes from lower extreme to higher extreme faster. Higher extreme to lower extreme faster. Whereas the percentage of stocks above 50-day moving average takes time to go from one extreme to another. The one that is slower, that is this yellow line, is more ominous, of course, because it needs a lot of bullishness for it to hit the upper threshold. So it is more ominous. both are useful in swing trading and one of them is useful in long-term trading as well. So we have enough concerns from these analytics on the internal health check. Enough for what? Enough to stop buying. Enough to stop buying, but not for shorting yet. I showed several trend line supports in market ETFs and also the market internal health check custom index. If any of those trend line supports are broken and the next support is far away, then I'm looking for shorting in that particular pocket of the market. Market is still bullish, so I have to wait, and the bullishness is again shown by sector industry stock advanced decline breadth from 1 day to 1 month. 1 month, the long term view is bearish, market pullback, but then it rallied. The 10-day view, which is also long term, is bullish already. This week is bullish, and even 2 days and 1 day both are bullish. So this is a very bullish picture, except the 1 month period. Can it come down now? Of course, it can always come down or go up. What would I like it to do? I would like it to come down. Why so? Because as a trader, if it comes down now, it will be very easy for me to find low risk shorting opportunities. If it goes up, it will not be easy for me to find low risk buying opportunities. What about bucket analysis? The distribution of stocks across their Bollinger Bands, which shows if the market is too overbought or oversold. It is neither, because neither the percentage of stocks above upper Bollinger Band or below lower Bollinger Band are hitting the 30-40% level, far below that. Only 6%, about 6% above upper Bollinger Band, only 1.3% below lower Bollinger Band. So market can go either way from this analytics also. And Q technical breadth will probably show a similar picture. Yes, the weekly technical breadth is still bullish across all the four categories. All signals, strength setups, trend continuation setups, reversal setups, all are bullish, and there is no alert from bearish headwinds also. So the weekly technical breadth is bullish. Daily is little bit bearish. Now, as I started my session today, technical breadth is very important because when trading stocks, we only make money buying stocks if the stock goes up. We only make money shorting stocks if the stocks go down. That's why I put most emphasis on technical analysis and then align the other dimensions. It can be done in top-down analysis or bottom-up analysis or a mixture. But here I see some more concern. So far, the market was bullish from all angles. But this is an alert that I am seeing. I am doing it live. We may try to look for some bearish setups later on. But before that, let's see what are the stocks I shared last week. On Twitter, I will not pick and choose, as you know, that's not my style. I'll just scroll down and look for the posts on Twitter. The handle is Superior Profit, now X. Look at the posts that had stocks in it. Some were about market, internal, some were externals, but some were stocks. So on Jan 23rd, this is a stock that I shared. Let's look at the post that was on Micron. Now I am reviewing how I analyzed the stocks when I shared it, whether it was bearish or bullish view, and how it played out. On 23rd January, midday, 12 p.m., I'm saying today also majority, that is 71% of semiconductor industry stocks are up as seen from Micron's real-time peer analysis using QVital. However, Micron itself is down and it is within 1%, in fact 0.79% below 52-week high. Very high price level, in fact all-time high. The Q fundamental scorecard does not look too attractive. Why? Because of this earnings growth, fund accumulation, valuation. And I commented time to look up the stock using Q unambiguous charts. There was no swing short setup, and I was having a Zoom meeting with some of the traders, and I mentioned this to them that when a stock is at all-time high or near all-time high, there is no chance of getting any swing short setup. Only short setup that we may get is day trading short setup. Impossible to get a swing short setup in any stock at or near all-time high. And I did take a day trade on Micron. Let's look at that. See how I traded that. The the post was on this day. And let's switch now to the intraday time frame. 5-minute chart. I'm compressing the chart so that we can see from my day of trade to today. And I will explain exactly how I managed the trade also. It broke below early range low at this point. The stop would be just above early range high. I shorted at this point, then it came down, stopped going down and moved little bit up but did not go even above early range low. I had booked some profit somewhere in this area. Why did I book some profit? Because the stock was at all-time high. There was no possibility of having a swing trade. So I booked some profit when I saw that it was not going down. And I kept an eye on the market also using the market internals that I always do on QLE. But I did not close the entire trade. Next day, it moved sideways. On Thursday, in fact, it opened up but again moved sideways. What do I mean by sideways? If a stock creates an early range right after opening, this early range is drawn on this Q pivot intraday chart. I use 5 minutes for morning session, 10 minutes for afternoon session. Both on Wednesday and Thursday, it closed inside early range. It did not move much after the open. So it moved sideways. On Friday, it had a very large gap down open. This was Thursday's low. This was Thursday's close. And this was Friday's open. So it opened far below Thursday's low. That was a huge gap down move. However, it did not go below early range low. This is early range. Did not go. In fact, it went above early range high. But it closed lower from Thursday's low. So what am I doing with my remaining position? I mentioned I booked some profit in my trade at this point. I held on to partial position. What did I do with the remaining position? Did I close the trade on Thursday? No. I held on to it, which is different from another semiconductor stock that I traded. And let me go through the other semiconductor stock, and then I will come back to Micron to explain why I am still holding partial position in the stock, why didn't I stop out, and why the other stock I exited fully. So I booked partial profit and I am holding partial position with a very small loss probably on the remaining position. Overall, the trade is in a profit. Let's scroll down on X. Interesting. Let's look at this post. This is the power of sector industry rotation analysis in real time. For about 2 weeks now, I mentioned that oil might be going up, and since last week, more than 1 week ago, I am sharing number of energy stocks to buy. This is what I shared on 22nd January in the morning, very much after the market open, 9:55 a.m. How am I able to do that? Because I am tracking the energy stocks, the ones that I like, and I am looking at it right after the market open and see how they are behaving. And I always mention very candid about it. If I am trading, I place my trade first before I make time to cut paste these images, mark them up, and then post on Twitter. So if I am able to share it at 9:55, I have placed the trade before that. So very soon after market open. What did I see in this stock? Technically, it had weekly long-term support, daily trendline support, weekly bullish indecision cluster, then weekly bullish headwind reversal signal, trendline resistance in weekly far away, daily at jump thrust low. Here it came even to price extreme low and started moving out of price extreme low inside a squeeze. A bull release came here, and this was the first day. If you notice carefully, this was the very first day when momentum color turned green after this long down move. As I am able to do many times, you are able to do if you are following the same techniques and systems. I tend to be a bit ahead of others, but at a low risk entry point. And I would also say this was probably the first day one could buy without taking too much risk. If you look at the weekly and daily signals, this was the very first day one could buy, and I am buying it near the market open. I shared the, not there, I mentioned about the YouTube where I talked about in the video, the previous week's video that time where I talked about energy stocks I was looking into, and I shared the ticker here in the Q Traders Club on my website. Every Q Systems traders have access to it, complimentary access. What was the ticker? This was the stock. The ticker was CHX. I shared it publicly 5 days ago. How is CHX today? So far I have shared Micron. I exited partial position with profit. And this is CHX, the next stock that I shared. I shared it on this day, the first bullish momentum day after this long drop and a lot of bullish signals in weekly, daily both. I entered the trade on this day Stop was just below the trend line supports. It never even tried to go down. I was aware of the trend line resistances, but that was far enough away for me to book at least partial profit. It has gone up and I have booked at least partial profit in the trade, and I am going to see if it breaks out of the trend line resistance. If it comes down, if it breaks the up, one may continue to hold the remaining position, and because partial position has been booked, I followed the Q guidelines, disciplined way of trading, place trailing stop on the remaining position so that the remaining position will also exit with a profit. So this trade also closed with a profit, and it is going to be a profitable trade. There is no other way around it. Interestingly, again, I could catch the stock at the very bottom, and I often say this is one way Q techniques and my techniques are different from many other traders. Many other traders only buy stocks that are in an uptrend. I do them, trade them also, but I am equally comfortable taking stocks, taking trades, buying stocks in a downtrend if I have proper low risk buy setup. Let's look at Twitter. Continue. What was my next stock? Another semiconductor stock, another stock that was at all-time high, AMD. I am sharing it on January 22nd, again right after market open, 9:40 a.m., just 10 minutes after market open. What did I see? And showed valuation not looking good, funds does not look to be accumulating. Remember the Hindenburg signal? It showed that retail traders are buying and the big players are not buying, they are selling. That is how to read that signal. AMD is at all-time high. On this day when I shared it, see this percentage. Percentage below 52-week high, 0.01 percentage. However, it was down that day, right after the open, and 98% of peer stocks were up. In fact, AMD was the only stock that was down at that time. Time to look at the Q charts. Let's do that. That's what I did on that day, January 22nd. And notice the earnings still not out. 30th January coming soon. Let's look at the chart as of 22nd January. So I am showing today examples of how I use day trading and also how I used swing trading and how they played out. This is 22nd Jan. Let's look at the intraday time frame. Again, it was at all-time high. As I already mentioned, there is no chance of getting a swing short trade setup using Q techniques or probably in any other techniques. Swing short setup at all-time high, impossible. Only short setup that we could have, if any, was using intraday time frame. Again, I compressed the chart so that I could see from that day to Friday, but I probably don't need that. Let me expand it. On the day that I shared it, it came down right after the open, and at the open it actually made a new all-time high on that day. New all-time high, then came down sharply. The moment it broke below early range low, I shorted it. Stop would be just above early range high. Didn't ever try to go there. When it came here and displayed the cluster of bullish indecision, by that time more than risk resistance was covered, and in this case, unlike in Micron, I closed my entire position. Why so? Why was that different from Micron? Because AMD has not declared earnings. Suddenly some news may come up related to earnings. It may hugely gap up. Who knows about AMD? It's a mammoth company. In fact, it's one of the mega caps. That was not true for Micron. Micron's earnings is next earnings, if I saw on Vital, it was in March. So I could hold Micron overnight, but I did not want to hold AMD. I closed the AMD day trade. Now, this is a probably good time to also see Micron and explain why didn't I close Micron on Thursday when it went up. Let's go to the daily chart first. I shorted Micron on this day when I shared it on Twitter. I booked partial profit by that day. On Thursday, it tried to go up, but I did not exit the trade. Why? Because by that time, I had turned it into a swing trade on the remaining position and the stop. And in this case, I was willing to look at the stop on a closing basis. The stop using Q protection signal was not hit. In fact, it was not hit even intraday, and certainly on a closing basis it came down. So I had no reason to consider exiting the small remaining position I had and I still have in Micron. I think my remaining position in actually my remaining position may also be in a small profit or small loss, I don't know, but overall it's in a profit. And that explained why I decided not to exit the remaining position short trade in Micron on Thursday. Back to Twitter. So far, all the trades I shared, I could exit them with profit or am holding partial position. Scroll down. Okay, we came to one energy stock that I shared in the previous market recap. In fact, in the previous market recap, I shared two energy stocks and I am quite open about it. Before knowing the results, I mentioned I took a position also in HP, and you can see how I used the industry rotation. It was underperforming for a long time. The moment it started to do better, how better? Top 20% accelerating industries, up industry. I looked for buying, found HP, and this is what I shared on 19th Jan. Let's look at HP now. What did I do with the stock? Was it stopped out or did I make a profit? This was 22nd when I shared the trade. How far below could one buy with confidence? I think that was the best day. Probably one day earlier, but remember on this day I am buying right near the open using probably I don't remember whether I bought this day. I think bought this day because usually I share it on the same day that I buy. I always share it, almost always share it when I buy. Not actually, I never share it after I know the result. I never know the result when I share. So I bought it on this day, let's say 22nd, when I tweeted it. My stop would be just below the recent low that was not hit. This was my risk. It went up, and I was again aware of the trendline resistance. Notice these energy stocks were in a downtrend. They are still in a downtrend, but I used the Q reversal setup successfully, and once again in HP, I booked at least partial profit. I have applied trailing stop to make sure the remaining position will also go with a profit. Another energy stock that I shared in the last market recap, that was TDW, and that I mentioned that, and you can see that was in an uptrend. I shared it somewhere here. 1, 2, 3, 4, 5 here. And I mentioned I actually bought it on this day. When I shared it in the market recap, it had gone up marginally. I bought it on this day using the flow trend following long setup. As I mentioned, I am equally comfortable taking trend following long trades. In this case, it was also a pullback long trade, as much as I am comfortable taking reversal trades with proper Q trade setup. Again, my stop would be just below the recent low. When it went up, it covered more than the risk distance. So I have again booked at least partial profit in the trade. So 100% of the long trades that I shared closed with a profit last week. The question is, are you able to do that? I think we don't need 100%. Even if we get 60, 70, 80%, even 60% is good enough. Trading stocks, and there is a maths behind it. If you are new, you may look at the maths, the philosophy of swing trading profitably. There are several slides, and yes, they are not charts, but I think this slide is as important as any chart. Even with 60% success rate, with just 2 trades per week or 100 trades a year, risking only 1% of total equity in a trade, assuming very reasonable 1:1 reward risk ratio. Remember, most of the trades that I exited, they had more than 1:1 reward risk ratio. So I could achieve this. I could achieve risking only 1% in my trade. That is in all our control. I achieved much more than 60% success rate. I took more than 100 trades per week, or more than 2 trades a more than 100 trades a year, or more than 2 trades a week. And even without all those extras, just with 2 trades per week, 60% success rate, 1% risk in each trade of equity, and 1:1 risk, even then we have 20% return on total capital, not on invested capital. This is simple maths, nothing to do with Q systems, but this is very important to keep in mind, and that is why I keep on swing trading. I don't try long-term investing unless I'm holding dividend paying stocks, on which I have also probably sold calls, making covered calls, long-term covered call. But usually I do swing trading, and this maths is the main reason for that. And I can trade in long direction, short direction. If you apply the percentages, numbers, etc., that I showed this week or previous week, or the week before that, you will see this percentage is coming to be higher than 20%. What percentage you are able to get is the question. If you are not getting at least 20% annually, I think it calls for some introspection. Why so? Meaning, which of these parameters you need to act on? Only things you need to act on is success rate, reward risk ratio, risk taken in each trade. That's it. And yes, number of trades you can take in a week or in a year. Which of them you need to adjust to get at least 20% success rate? I think it is very doable. And because we are able to short stocks in the USA market, in a bearish market also, we can continue to have some income from the market. And my videos are probably living proof of that. Now, those were trades of last week. As I mentioned, I was not buying general category stocks. I bought energy stocks, and I bought some high dividend paying stocks. I am holding them. I have no plan to exit those high dividend paying stocks. But I was not buying general stocks, and I mentioned that I started shorting. If you notice my tweet, this one, HP, I selected the energy stock based on the industry rotating into favor and showing acceleration. What is the industry sector today that is decelerating? We can find out easily. Let's do the top-down analysis. We saw already sector industry stock breadth is bullish, no bearishness, but let's look at deceleration also. Sort all the sectors in the sector scorecard by strength to weakness. Which one is the weakest? Shocking, isn't it? The infotech sector is now the weakest over both 1 day and 2 day. And it is also showing huge deceleration. That's a big change, very big change. And the sector is actually down. Not only is it relatively weak, it is actually down on 1 day and 2 day. So if I could buy, or I was willing to buy, and I did make profit from HP by buying into a sector that was turning from weakness to strength. By the way, energy is still the strongest sector. My timing was perfect, isn't it? I bought during this transition somewhere here, started buying somewhere here within last 10 days, maybe slightly more than 10 days. Perfect timing. If I apply the reverse logic, it's time to start looking for infotech stocks for shorting. But let's look at the industries into infotech sector. Shocking, isn't it? Which industries in infotech sector are the weakest? Both of them are semiconductors. Weakest in infotech sector, weakest of all sectors. Semiconductors, materials and equipment, and semiconductors. Also showing huge deceleration, hugely down over both 1 and 2 days. That's a clear sector to look for shorts. And remember my posts that I traded profitably, Micron and AMD, they are in these sectors. I could see the weakness coming in before others, probably anybody else. Or I think as good as anybody could do it. I should not say before anybody else. I think I did the best one could do. And why so? Because I was watching the strongest sectors, industries, and seeing if they are displaying weakness. The moment they did it, I looked into individual stocks. The moment the stocks showed weakness, I shorted. Again, I shorted the two stocks at all-time high, near all-time high. So they were day trades. One I am holding partial position. But now it is different. Intel announced earnings. I think Intel is a large company. Let's see some interesting things. Intel fell down after earnings, but was it only Intel? Let's carry out a peer analysis of Intel, and let's also look at Intel's charts. Q systems are unambiguous, and we'll see something on Intel's chart. Intel was in an uptrend. Daily was also showing uptrend, which started to move sideways just before earnings. Why I am saying sideways, not downtrending, because we did not have lower high, lower low yet. That changed on Friday. Can you see a pattern that has so far never failed in a stock? Jump thrust high, price extreme high, came a big move down 3. That came on Friday. For as many stocks as I remember, when this pattern came up, it led to further down move. Can it go up? Yes. But over a number of weeks, months, days, I have seen this pattern almost always, I hesitate to say always, leads to a further down move. Now, Intel is just one stock, right? AMD is also in the same industry. AMD is at all-time high. Micron is near all-time high. Was this the reason to consider shorting in semiconductors? No, this was not the only reason. Let's look at Intel's peer analysis. As of Friday, on Friday, 100% of Intel's, that is semiconductors industry stocks were down. So the weakness is, I may use the term, all pervasive in semiconductors industry. Not about AMD, not about Micron, not about Intel only. And this weakness is coming when? At the very top, in an industry that was scored number one just a while ago. Was it scored number one or very high? Let's see. I mean the strongest one. Very near to the strongest one. Top 20% score became the weakest ones. Top 20%, we know that from the checkered background, dotted background. So from top 20% to the two worst industries. That weakness is not because of one stock, that weakness is because of all stocks coming down. That is the time, in my view, to short. Look for shorts in semiconductor industries. I did not look for stocks because I looked into the semiconductor ETF. And if I am shorting at the very top, and if there is a liquid ultra ETF, why not look at that? SOXL, is it ultra? Yes, 3x bull semiconductor ETF. What did it show? Very interesting. The unique bearish headwind signal came on Thursday, the day before Intel's earnings. That was a warning signal. In fact, SOXL was at all-time high when the bearish headwind came, and again it came before, one day before Intel's earnings. So SOXL, the 3x semi bull ETF, is giving me a short setup on, or short signal at least, on Thursday itself. I did not short it on Thursday. I saw Intel's result and I saw the pattern in Intel that I showed. Let's go back there. Jump thrust high, price extreme high, big move down 3. Then I shorted semiconductors. But that was not all. You know, if you are beginning with Q systems, you may make handy use of the expert commentary. That's a program in itself that reads the charts on Q Global like I would do. And I'm quite good in reading these charts. Even I open the commentary sometimes so that I don't miss anything. And when I saw the weakness in Intel, I wanted to not miss anything. What did it show? On Friday, in terms of actual trade setups, it flashed a breakout short setup, trend following, lower high, lower low, flow short setup. Just before that, it was moving sideways also. So a box short setup and a gap down short setup. How much better can it get? I don't remember seeing 4 short setups coming in any stock in last couple of months. And in terms of patterns, it showed bearish indecision pattern and also bearish fan out pattern. That was enough reason to think that Intel's down move is likely to continue, in addition to the jump thrust, big move down 3 and price extreme high. And we saw all pervasive weakness. So I wanted to short SOXL, but SOXL has a brother, that is SOXS, and they don't have, don't exactly mirror each other. SOXS is 3x short semiconductors. SOXL is 3x long semiconductor. Psychologically, I find buying a stock easier. I am going to short it if it is a stock and I'm bearish on it, just like Micron trade, because Micron doesn't have a contra ETF, but SOXL has a contra ETF, SOXS, and it did not show the weekly bearish headwind because they don't perfectly match each other. But looking at SOXL, bearish headwind and then further down move, looking at Intel, looking at 100% stocks in semiconductors going down, looking at the huge deceleration and sudden weakness in semiconductor industries, both of them I took a long position in SOXS. And let me spend maybe one more minute to explain exactly which minute I bought it. I was watching Intel, I was watching the Q Vital industry weakness, but exactly when did I buy SOXS? Let's move to 5-minute chart to be as precise as I can. On Friday, SOXS, the short contra ETF, hugely gapped up. When Intel hugely gapped down, moved sideways, broke out of the range, came down. I was watching movies on Amazon Prime, created bullish indecision cluster, failed to go below early range high. So it broke out of early range high finally here, pulled back and held the early range high with bullish indecision, gave a bull release signal right after that. That was the exact candle I took a long position in SOXS. That was also close enough to the market close that I thought it is okay to take a position and it may not suddenly come down. And I was looking at Intel, I was looking at industry weakness, etc. So that was the exact minute, in fact, when I took a long position in SOXS, and I explained why I did that, and I'm holding it. Isn't it at least interesting to see how I am using the sector industry rotation to buy in the weakest one? Not only reversal trades but also trend following trades like TDW, and shorting the strongest one the right day, the exact day when it is decelerating or coming down. Now I saw there are several possible short setups if I look at Q Finder. However, the market is still in an uptrend from external view. Yes, internal view is showing weakness, but it is still in an uptrend. So I am reluctant to look into shorting candidates. You may look at them and get ready. I'm also going to look at them after this market recap. I may create a watch list, but I am very careful. And you notice I shorted the strongest industry, or at least the strongest one of the strongest a few days ago, because my stop loss is very narrow. But I'm going to get ready with a few more stocks on the short side. I'm reluctant to buy unless again it is in a languishing industry or a high dividend paying stock. That view has not changed. You may see what percentage of your stocks are giving profit, what is the reward risk ratio, and fine tune it. I think you can do better than me because many of you are in the proper time zone. If I am able to do like this in the opposite time zone in Thailand, anybody living in America should be more fresh, need less coffees to trade in the biggest, largest, deepest market of the world. Make some money from that. Thanks a lot for attending. I look forward to seeing you in my next session, most likely next weekend. My road trip is overdue. I may go sometime this week. I hope to be back before the weekend. Let's see. Have a great weekend. And as these live examples show week after week, as I always say, there is no reason not to do that. Trade profitably. Thank you.